Tim Quast, welcome to the show. How's it going? You feeling better?
I am.
Excellent.
Do you have
Oh, good.
COVID?
Okay. So it was telling me my mic was muted. I am. Thank you. I'm honored to be here on a Wednesday. Thank you for tolerating me midweek.
Yeah,
We like
Good
this.
to,
We like
good to
this.
see your faces.
of course.
Did you have COVID, Tim?
No, well, who knows?
Who
Really?
knows?
But
Who really knows?
Right. The test was immediately because we've got like drifted piles of rapid tests everywhere because we travel a fair amount. So I ran a test and it was immediately negative, but I am suspicious of that. But it's a cold. Really, that's what it was. The worst part is I had a fever of 102 for a day.
Sounds like COVID.
So I had to binge watch some Netflix, but other than that, it's not a big deal. Just
What'd you
pushed off
watch? What'd you watch? What'd you binge watch?
I watched Dune, which
How is that?
I haven't gotten around to
the
it yet.
new Dune.
Yeah.
I was riveted. It is better than Star Wars.
Okay, so
Yeah?
wait, hold on.
Fabulous.
All right, on the bucket list right now.
Hold on.
Yeah.
I didn't read
Writing
the
it
book.
down.
Did you read the book? I did not read the books.
I did read the book.
All
Yep.
right. So
Mhm.
will I understand it if I didn't read the book?
Absolutely.
Okay.
It's actually very well laid out,
All right.
and the
Check
as science fiction goes, it is a lavish feast. It
Okay.
is just spectacular. Yeah.
Okay.
And you could tell that they're setting up the next one, and I can't wait to see what happens because they've set it up perfectly. So I will give a resounding 2 thumbs up to Dune, the new Dune.
All right. Let's talk about markets here a little bit, Tim. Every time we've had you on now for the past few weeks, it's been we're bearish. No, we're bullish. What is the flow? What is the supply and demand telling you about right now?
Well, I would characterize what I said about the market as very disciplined and consistent. I will go on the record to say I don't think there was another voice besides mine that said if tech turns, and it will happen at March expirations
That's true.
and index rebalances. And what happened? Like clockwork, it happened right then. And that's where sentiment bottomed. That's where money returned. That's where everything reweighted, and the market surged. And war in Ukraine persists. Fed rate hikes persist, perhaps in even more pronounced fashion. And here we soared in tech. In tech, we're up 13% or better in the sector.
Yeah.
And nothing flat. And there are other fascinating little bits of market structure there. But for traders, to me, the point is traders, there's once again, repetition is the best form of emphasis, is that context matters. What is occurring in the market is much more powerful than what is occurring in Ukraine. So if there is an options expirations or an index reweighting, you should look at what the supply demand balance is and where's the money going. And then you just follow it. That's all you got to do. And when it hits a peak, which it's doing now, right at month end, quarter end futures expirations, which are tomorrow, then you have to think about being prudent. And what is the likelihood that we are able to sustain those kind of moves? Well, statistically, it has diminished dramatically. I mentioned this about Tesla. Look, Tesla's had a great move. A lot of it came on supply deficiency. Unless there's another one of those, it will stop rising. It's not that complicated. I think we spend so much time trying to figure out why things occur when all you have to do is look at supply and demand and the context.
So how are you approaching today, tomorrow, Friday, then around this quarter end?
Well, I'm approaching it by sitting on a giant pile of cash, which I generated trading in the last 10 days. You had Micron up. Well, I made every trade I made last week, I made more than the annual cost of Edge, and it was a busy week for me. So I took advantage of those. Now I will wait because statistically, if the broad sentiment is 7.6, and I can run the math every way to Sunday, the probability that we produce additional gains like we've experienced, at least in the near term, diminished sharply. Well, here's one way to think about this. So if you add up the down days year to date in 2022, the market is down 35% using SPY as a proxy. If you add up the up days, it's up 28%. So the net of that is how much SPY is up, which is and it's down 6% yet year to date. So what we want to do, traders, is avoid the 35% declines and capture the 28% upside. You can't do it perfectly, but a great way to do that is broad market sentiment. So here's how I would look at this. If I'll share my screen.
Before you do that, Tim,
Yes.
why? I mean, if you were that good picking things on the upside and there's nothing to buy,
Yeah.
and there is those 35% declines when you add up the down days, give us some shorts, baby. Give us some shorts.
Hey, all you got to do in Edge is run a screen for the stuff that has falling demand and rising supply. That stuff's going to go down. It's not really. I'm not very good at that, Joel.
Okay.
And so, you know, I'm not very smart. I can only do like one or two things. And so if I were smart enough to short stuff like you are, I think that there's a cornucopia of opportunity. You know, you look for those supply demand convergence, stuff declines. Supply demand divergence, stuff rises. I'm a simple guy, and that's how I think about it.
So as long as we don't go into a super bear market, right?
And who knows, right? That's something
Right.
who can tell us if that's going to occur? You know, I certainly can't. I don't. You know, I'm not saying, oh, this is a bear market rally. You know, you could listen to CNBC all day long and hear that debate. Which thing is occurring? I don't know, but I don't really concern myself with that. I do know that the market is predicated on a set of mechanics that make short-term supply-demand fluctuations far more reliable than macroeconomic meandering.
Stick with what got you here, right?
Right, exactly.
Okay,
Yeah.
what do you got for us on the edge screener?
Well, I think that people are going to be interested in knowing, well, what happened to GameStop and AMC yesterday? You know, what they were volatility halted.
Yeah.
They have exploded. I think GameStop is up 42%, AMC up 24%. And I thought it would be worthwhile to look at this to understand what occurred. And I've got so this is what we call the data metrics. And I've got, here's AMC and here's GME. And notice that they're 10 out of 10. So on the demand side, they're slamming against the ceiling. They're both almost identical in terms of short volume. 55% of the trading volume is coming from borrowed or created stock. Market makers create stock to fill limit orders coming from retail traders. When they are concerned about being on the wrong side of the supply-demand balance, and it'll be folks like Citadel, Jane Street, the folks who buy retail flow, Virtu, then all you have to know is you come over here to the behavior and go, oh, son of a gun. There you go. So if you want to know what happened with GameStop and AMC, there was an explosion of retail limit orders into the pipeline, and the folks who buy that said, we could start losing money. Let's slam it into the limit on the volatility girders of the marketplace, which says if the price moves more than 10% outside the average price, roughly, they call it the reference price, in a rolling 5-minute period, then the stock is halted. Well, then all the high frequency traders can shift to the short side, and down it goes, and the whole thing resets. And that way, the intermediaries can absolve themselves of the risk that is associated with buying and selling retail order flow. That's what happened. And you don't have to wonder, can we perfectly predict what will happen to each of these? Well, no, but I'll show you how you can look at them. You know, all you have to know is if supply is declining and demand is rising, there's a probability that the price is going to go up. When those conditions reverse, which they're beginning to, they're not all the way there. So if you own AMC and you're rending your garments because you lost money yesterday, hang on. It might do just fine again today, tomorrow. But if you recover, then you should leave, because the probabilities are already telling you that the likelihood of additional gains of that nature have diminished.
Well, this has just been an unbelievable move. I mean, it broke out from $15 1, 2, 3, 4, 5, 6 trading sessions ago, and the stock more than doubled in 6 days. And I always say, when your stock doubles in 6 days, what do? Yes, sell it.
Right.
You don't sit around and say, oh, it's going to 70 or it's going to 80, because if you sit around long enough in some of this stuff, the market eventually takes the gains away for you.
It sure does. As we've said before, our favorite philosopher in the trading profession is Steve Miller. You know, the great philosopher Steve Miller. Go on, take the money and run. Yeah, that's what you always do. That. Yeah.
Truth.
Yes. Timelessly true.
Timelessly true.
And the same thing is true with GME. See this? Once again, if you see rising demand, particularly when the whole market is developing a momentum flavor, which you can see in all the lines moving like that, and there's a supply deficiency below the trend, that is something you can ride. Even now, after what happened yesterday, it's not quite over. I don't like short volume over 50%, because if any demand diminishes, the price is going to go down. But if you are still in GME, you've got a couple of days maybe to get yourself out, but be prudent. If you look at that data and say, wow, demand is slamming into the ceiling, supply is starting to creep back up, I better, if I'm given the opportunity, take the money and run. That's what you want to do. And you can do this with any stock, whatever you're in. You know, if you're in MU, let's go back up and look at MU. I'm cautious trading stocks into earnings because you never know what they're going to do. It's one of those black holes. It's less predictable. Yeah. I would look at this and say, I'm not staying in MU. If you get a bounce today, take it, because demand is falling and supply is above the trend. It's not bad. These are not bad conditions, but they're not the kind of conditions that produce a 10 or 15% return. And that's why I left. Once it topped, I'm out. It's not complicated to me. I don't have to, machinate or draw lines or try to figure out where something's going. I just look at the demand is stalled and supply is starting to rise over trend. Well, that's a good reason to take the money and run.
I think that's as good a place as any to end it. Although here's a question, I guess, from PJ before we let you go in the chat. Okay. Any thoughts on any oil or commodities?
Well, you can certainly track energy. I have a gold portfolio. So, here's what I do. Anything like that, PJ, that you want to track, all you have to do is create a portfolio, piece of cake. That would be a static portfolio. So you just start if you have a set of stocks that you follow that give you a commodity read, create a portfolio for that and then watch it. We have an energy portfolio in here. I have all kinds of derivations, clean energy. Here's energy. And I even have an energy liquid up. There are only 2 in it, right? So there are only 2. Liquid up means they're liquid stocks with rising demand and diverging supply. Well, that's going to give me the best stuff to trade short-term in energy, and there are only 2 in it, and they're led by fast traders. But yes, we can look at that. If I look at gold, let's look at where are we at? EFG. There's gold. Gold supply is steady, a little over trend. Demand is falling. So I look at that and say the dollar's continuing to rise. Probably the good safe harbor that gold gave us right in here now maybe isn't so good. Well, it'll always tell you. Supply and demand in anything is going to tell you, and you can slice and dice it however you want. So that's what I do. This is what I look at every day. I'm going to look at where's the money going. What are the odds that things are going to move in my favor? I can see that with broad sentiment. Every time that the market has been at this level, in a number of days, it has plunged. In a number of days, it has plunged. In a number of days, is it going to plunge? I'm not saying it's gonna, but if I look at that, I would be well, let's take the money out of the market, because if it goes up, I'm not missing out. You never miss out because the market goes up. Because if you buy something at a price that is lower than where you sell it, who cares? But if the market goes down, wow, now you have to dig yourself out of a hole. I would rather avoid the holes. And so there's a great thing to see, traders.
That's it.
Futures expirations are tomorrow. There was a huge behavioral change yesterday. I think that big institutional money may use this opportunity once again to reduce its exposure. I'm not saying it's gonna, but if it does, we're going to get clocked again.
Tim Quast usually joins us on Mondays for Market Structure Mondays, to this week joining us on Wednesday. MarketStructureEdge.com is the platform. Link is in the description. Would highly recommend you all check it out. Tim, a pleasure. Have a
We
good
may
one.
have a
to see you
new
guys.
term. If the market goes down tomorrow, we're going to say it got quasted.
I'm not sure that's great, but you know, the terms are good.
All right, have a good one, Tim.